right, good afternoon. Good afternoon. Happy Thursday. How is everybody doing out there? Hey, Rod. Thanks for jumping in. Happy Thursday, guys. Elaine Proby here, CEO of Probis Tax and Accounting and Tips from Elaine's Desk. And welcome back for our Thursday afternoon conversation. And this one is going to be very interesting because a lot of you guys out there is getting down to the end of the year, of course, and I get a lot of questions from folks about what it is that they can do to help save on their taxes at year end. And this is a good time for us to talk about this. And one of the most common things is charitable giving. So we're going to talk about some tips to strategically give donations to charity and other organizations that's going to be able to affect your taxes. And I want you guys to understand how this will affect your taxes and what types of limits there is in terms of giving. All right, so those are what we're going to talk about today. Hi, Laverne Smith, thanks for jumping in here. You guys hit like and share on this video. Get everybody involved. This is some very important information. Everybody can use this because, once again, we are at the end of the year. We want to find out about tax tips, different ways that we can save on our taxes at the end of the year. And, of course, after 12/31, this year is out of here, and some things that you didn't do, you won't be able to do them again. So this is a good time in order for you to look at your donation strategies and see what you need to do before the year is out. Okay, so let's jump right into this. Hey, Karen Jones. Hello, everyone. Hello. How are you? So let's jump into this, guys. The first one is donation limits, right? So I know a lot of us are into giving donations. A lot of people do tithing at church and what have you. They do a 15% of what their income is. But guys, you could give up to about 60% of your adjusted gross income in terms of donation to a church or other charitable organizations, right? So that's a lot that you can actually give. In other words, if your adjusted gross income is $100,000, you could give up to $60,000. Now, what makes up your adjusted gross income, guys? It's all the monies that you make on your W-2s, monies that you make from your pension, monies from Social Security, monies from interest, dividends, all this income minus any other adjustment, that's the number that is used. So if you want to know how much or what's the maximum, because most people ask me that, how much can I give? The maximum cash donation that's going to affect your taxes would be up to 60% of your adjusted gross income. Once again, if that number is $100,000, your adjusted gross income, you can give up to $60,000. All right. So I wanted to make sure that you guys are clear on that because I know a lot of people who give money to the church and, a lot, and folks that are very diligent, they give a lot and they need to know how much it is that they can give that's going to be affecting, as far as their taxes is concerned, that they're going to benefit from. Right. But you can, of course, give as much as you want, not being worried about what the tax implication is. All right. Now, the other thing that you could do is give non-cash donation. So it does not all have to be a cash donation. You could give non-cash donation, guys. And this is also a very good deduction on your tax return. The only thing about non-cash, things such as clothing and furniture and, automobile, if you donate one to a charity, things such as this does not have a actual value because they're things that you own over the years. So the only trick to that, which is determining what the fair market value is in order for you to get your donation limit. So if you donate, let's say anything that's non-cash, anything that you can that you don't have to, that you can sell on the fair market value, and the fair market is what that value is. So in other words, if you donate, let's say you donate a car to a nonprofit organization, whatever you can sell that car for on the market, whatever the blue book value of that car, whatever it's worth is what you can deduct. Okay. So if you donate clothes, if you donate furniture, if you donate anything that's non-cash, you determine what that fair market value is, that if you could go to the street corner and sell it, how much can you get for it? Can you get $100 for it? Can you get $200 for it? So there's no real one method in figuring out what fair market value is. Technically is what someone will pay for it on the market. So that's the amount that you get to deduct on your non-cash contribution. Now, I know a lot of folks donate bags and bags of stuff, clothing and shoes and bedding and coats and all kinds of stuff to nonprofit organization. A lot of people do this, especially at the end of the year. They clean out stuff that they don't need anymore and they donate that stuff. So the thing about it again is it's what you can get as far as the fair market value is what you get to deduct. Okay. And there's no real simple way to determine that other than what would somebody pay you for it in the fair on the market. So those are donations. Those are the limits of the deduction that you can take. Again, cash up to 60% of your adjusted gross. This is how much money you make, how much your income is in total. Up to 60% of that you can deduct, and you can get a tax benefit for it. All right. So make sure you can give as much as you want. But again, I want you to be aware that there is a limit that's going to be affecting your taxes. And it's not just everything that you give, but the government, of course, they put limit on all this stuff so that everybody can benefit from it. All right. So today we're talking about tips to strategically deduct your charitable giving. Jones, Bobby, thanks for jumping in. Good afternoon. Good afternoon. All right. Thank you for jumping in here. So guys, let's jump right into the second point today. Now, I really, really like this point because this is a term that, they call it bunching donations. And when I heard it, was like bunching donations, but of course, it's exactly what it means. So you get to deduct your donation if you itemize on your tax return. Now, there's certain donation and certain years that the government allow you to say if you donated maybe $300, I think for a single person, you don't have to itemize. They allow you to take that. Some years that's on, some years it's off. But if you itemize all your taxes, meaning taking off all your deduction, mortgage interest, medical, all that good stuff, you get to deduct more. If your itemized deduction is more than your standard deduction, you get to reduce your taxes by that amount, your taxable income, right? So bunch of donations, meaning like, let's say there's a year that you have some stuff to give in donation, but it's not a lot. So you don't have a lot to give this year. So your itemized deduction is not going to be as much to give you a benefit, because there is what the government call a standard deduction that you can also use. If you don't itemize, you have a standard deduction, which you can use to offset your taxable income by, right? So let's say you don't have a lot of donation in one year, and you'd be like, okay, well, I'm just going to use my standard deduction, and I'm going to save all the stuff that I would donate in 2023. I'll just save it for 2024. Put everything together with what I will have in 24, and then you bunch it together, and then you give that donation in 2024, which means that now you have more to write off in 24. You see, so that's all that means. So instead of taking a little bit this year, that's really not going to affect you because it's not enough to exceed standard deduction, and then you do a little bit in 24, it's not enough to exceed standard deduction. So both of those years, all you get is just the standard deduction. Why not save this donation, put it together with 24 donation, and then exceed standard deduction and have more to write off? So that's what that means. All right. So you want to strategically look at this, and this is why we're talking about it now. If it's not enough to make a difference, hold on to it, give it next year, add it all together so that you'll have more to deduct in the next year. Right. So just to give you an idea of what the standard deductions are, the government allows you to write off as a single person $13,850 is a standard deduction. So if you made $50,000, you don't have any write-off. You're allowed $13,850 as standard deduction. So you subtract it from your income, and then you pay taxes on the rest, right? So you don't have to have all these deductions. You have standard deduction that they allow you to have. If you're a joint married filing joint return, is $27,700. You subtract that from the income that you make, and then you pay taxes on the rest. Now, of course, if you're itemizing, meaning you're writing off deduction, mortgage interest, and all those other stuff, including your donation, and it exceeds those numbers, then you have more to offset your taxable income, right? If you're head of household, a lot of us are head of household, you can deduct $20,800 as standard deduction. This means you don't have to have any itemized stuff. You don't have to own a house. You don't have to have any of those medical expenses, none of that stuff. You can use the standard deduction, reduce your taxable income. So let's say you made $50,000. You write up that $20,800. If you're head of household, you pay taxes on the $30,000. That's how it's set up. So once again, if you can itemize, meaning you have more expenses than the standard deduction, you reduce your taxable income and pay less in taxes, right? So bunching donations, if it's not enough to exceed standard deduction, save it. Put it in the next year, put them all together, exceed standard deduction, have more to write off, and take advantage of it in the following year. That's what that means. So Laverne says, do you have to give it to Do you have to give it to a charitable organization, or can you donate to individuals? Very good question, guys. You have to donate to a qualified organization. Now, I'm glad you asked that question. It's one of the points I wanted to make. It's very, very important. A lot of us give, and we give a lot to individuals. We give a lot to other people. We give a lot to, whatever it is. However, as far as the government is concerned and taxes is concerned, you cannot write off the stuff you just give to an individual. It has to be to a qualified organization. It has to be to a church. It has to be to a nonprofit organization, some type of organization, schools, different, associations. It has to be a qualified organization for it to be a tax deductible item. And, I wish they would change that. But again, it's hard to do that, because if you notice, a lot of stuff that you give to individuals, even if you give to individuals on the street, it's better off for you to take it to an organization. You can get the write-off from there, and then, of course, it can affect your taxes. Now, this is the only way you could do it, and I wish it was some other way, because we do so much individually, but it's not a deductible item, okay? So thanks for asking that question, Laverne. So that's the second point, guys. Bunch of donation. Hit like and share on this video. Get all your folks involved. Hi, Norman Strong. Thanks for jumping in. We're talking about 3 tips for strategic charitable giving. This is the season to give. This is the end of the year where we want to get the best maximum tax benefit. So it's a good time for us to know how to give, where to give. That good question that Laverne asked. Where to give our donations to, and how much we can deduct from it. So my third point, I have to hit like and share on this video, guys. Hit like and share. My third point today, this is so important, the tax deduction benefits. Now, a lot of us is really misinformed. Some of us think that if we give $5,000 to the church, we'll get $5,000 worth of refund. And I have gotten people come to the office all the time. They give a lot of money and a lot of donation, a lot of stuff back to the church. And they come and they said, okay, well, I gave $10,000 in donation. And they said I can get that on my taxes, but they're not explaining it correctly. You're not going to get back the $10,000. It's not a dollar for dollar refund. That's not how it works. Okay, so I need folks to really get this clear. The tax benefit, when you give a donation, right? And remember, we said that you reduces if your donation and all your other itemized deduction exceed that standard deduction, it reduces your taxable dollars. So if you give $10,000 in donation to the church and it adds to your tax deduction and your tax bracket, let's say, is 25%, you will save the difference of 25%. So let's say $10,000 donation help exceed your standard deduction. It reduces your taxable income. 25% of what that exceeds the taxable income, the benefit is your savings is 25% if you're in a 25% tax bracket. So if it's a $10,000 donation and your itemized deduction is more, $2,500 basically is what your tax implication is going to be. So, and it reduces your tax liability by, say, $2,500. Not because you gave $10,000 to the church, you're getting back $10,000 refund, or you're getting that money back. That is not how it works. And, a lot of people really don't get that right. And I have people at my desk all the time where they have given a lot of money, $20,000, $30,000 and even more to the church. And they were told that they'll get this money back. And they gave it to the church thinking they'll get all of this money back. But that is not how it works. It is the amount of your tax bracket, whether it's 25%, that is your savings in taxes from your total deduction, guys. So be clear. Consult with your tax person. If you really have a large donation you want to make someplace, just see how much it's going to say. I mean, giving is fine, but you want to make sure that you're not misunderstanding the tax benefit and be disappointed or surprised when you get to do your taxes, because at that point you can't get it back. It already is too late. Okay. So those are my 3 points today. Tips to strategic charitable giving. It's a wonderful thing to do. We all want to help. But if we're looking for the tax benefit, we also want to understand how that process works. So let me recap these 3 points today. Okay. So the first one is donation limits. You can give all you want, but as far as the tax is concerned, there's limits in what you can deduct. Up to 60% of your adjusted gross income. If that number is 100,000 in income, wages, pension, Social Security, whatever that income is, then you could give up to $60,000 and get the benefit. Now, I want to say here as well, let's say you gave more than you're able to deduct, right? And this happens. If you're supposed to give up to say 60%, say $60,000, but then somehow you gave $70,000. You will not be able to deduct $70,000, but what happens is the $10,000 is going to go carry forward to the next year. So you won't lose it. I like that part. I need to make sure you guys understand that part. You won't lose it. The other $10,000 that you're not able to deduct this year moves over to the next year. So the next year, if you gave no donation, you still have $10,000 sitting there to deduct. So you can give as much as you want, but the benefit is going to be up to the maximum allowable limits that the IRS gives you. So hey, give as much as you can afford to give. You won't lose it. It will move until next year. So I just wanted to make sure that you guys understand that point. Second one is bunching donations together. Make sure that if you don't have enough to deduct this year, it's not going to make a difference. It's not going to exceed your standard deduction, which is the $13,008 if you're single, the $27,000 if you're a married joint, and if you're head of household, it's $20,000. If that's not going to exceed that amount that you can write off, then hold on to it. Give it in 24. You can have a better write-off in 2024 when you add it all up together. This is perfectly fine. Take standard deduction 23 and have more to write off in 2024. Okay, so that works, and that's what bunching it, putting it together means. Take advantage of it in the next year when you have more to write off. Okay, hey, Lerner Smith, thank you for the hearts. All right, and the third point, guys, the benefits. It's not a dollar for dollar refund. It's not a dollar for dollar tax benefit. It is based on your tax bracket. If your tax bracket is 10% or 25%, if you gave $20,000 or let's say $10,000, it is going to be what your tax bracket is. It's going to be 10% of that $10,000. That's your tax savings. You do not get back all the money you donate to any charitable organization because you gave it to them. You don't sit and do your taxes and think you're going to get this $10,000 refund back if you gave it to the church. That is not how it works, okay? So you save taxes based on your tax bracket. $20,000 if you give it to them. Let me just say this. I want to make sure that this is very, very, very clear. I've gotten so many cases where people misunderstand and they clearly think that they'll get back the money that they give to the church. You're not getting back the $10,000. You're going to save on your taxes. If you paid in more in taxes, you will get a refund, but it's based on your tax bracket. So 25%, if that's where you're at, you gave them $10,000. That's a $2,500 tax saving, guys. You're not getting the $10,000 in refund. Okay, so it's all right. Give as much as you can. Just understand what the benefits are and don't be disappointed. Or if you really need that money and feel like you're going to get it back, understand the process. And if you're really concerned or confused about it, again, you can consult your tax consultant, or you can give us a call as well and, kind of get some clarity on that. Okay. Hi, Sylvia. Thanks for jumping in. Hi, my beautiful sister. Thank you for this. Information. Yes. Thank you for jumping in here, you guys. So hit like and share on this video. Very important information. And that's my recap. Again, you guys, I will advise you to go to Tips from Elaine's desk. I keep saying that there's so much information there. Those of you who have started your business, a lot of folks are starting business. Some people have questions. Should I start now because the year is almost over? Should I wait till the top of the year? What's the best time to start? Those questions, if you need to get those answered as well, go to elainesdesk.com and look at those videos, see what it is there that's going to assist you. And if not, give us a call at Probus Tax and Accounting at 323-290-9034, or go to probustax.com. There's a calendar there. Make sure that you book yourself a free 15-minute consultation. The year is almost out. You need to know a lot of stuff that you can do before the year is out. So give us a call. Sylvia Jones Valeria, thanks for jumping in here. Thanks for sharing this great information. You're very welcome. Joan, thank you for the great information. Thank you guys for jumping in here. Very important information. Hit like and share this video. Make sure that all your friends get this stuff, okay? And I think that's it. So stay tuned. Every Tuesday and Thursday, we're back here again. Share this video. And I'll see you guys back here on Tuesday. And with that said, you guys have a wonderful rest of your Thursday afternoon. Again, almost the end of the week. So you guys have a fabulous weekend. And I will see you guys back on Tuesday. With that said, take care of each other and take care of yourself. Bye-bye.